What's up traders, Tom here with another video. The stock market seems to be on thin ice at the moment, with every word and piece of information causing wild volatility. With a swing of over 2% in the S&P 500 today and the Nasdaq at all-time highs, how can we invest or trade these markets? Stay tuned. Today we'll be talking about the latest stock market news, and we'll be diving into the S&P 500, the Nasdaq, and gold at the technical analysis for these levels, and a key kind of theory that I have about the whole indices at this time. If you've been enjoying our content, or even if you're new here, why not think about subscribing and hitting that bell? We'd really appreciate it, and I just want to remind everybody we are giving away $500 to one lucky subscriber on our road to 20,000 subs. All you need to do is be a subscriber, and if you want to follow us on one of the social medias or click the links down below, we'd really appreciate it. And we'll draw that when we hit 20,000 subscribers. We do appreciate the support of the community. So our story today begins with the White House advisor, Peter Navarro, and his comments during the Asian trade session. Basically, he said that the US-China Trade Pact was over, and this stoked incredible volatility with the markets that are already kind of jittering, going down and nosediving. In fact, every 5 minutes, it was another 20 points on the S&P 500. This comment was quickly overturned though, with a statement saying that the words were taken wildly out of context, and of course Donald Trump coming out after that point and saying, no, the trade pact is fine and it's still okay. And the markets have since recovered, and actually they've gone up since that point. So let's talk about this China trade deal. One thing is that there was always this idea that China would meet farm commitments and they'd meet farm goals. In fact, it was meant to be $40 billion in purchases. Well, the January-April purchases have not been very strong. In fact, they're under $5 billion. Yet the total goal is $40 billion, and it doesn't look like if this is going to be the current ramping of the soybean purchases and everything else, that they're going to meet the goals. And this could really be one of the big stories of the year. Remember, we may not worry about this crisis right now because of the Fed, but China-US trade deal is important to the markets. And we saw the volatility that came in the first time, and this will probably be one of the bigger triggers that we see. If it falls apart, what will happen to the stock market? It could be a bit of a bloodbath. So that brings me to the next point, and really the point of this video that I want to talk about. And that was that the Nasdaq is now up 12% for 2020. The Dow Jones is down 8.8%. And the S&P 500, the most important index of them all, is still down around 3.5%. So really what's happening here? Well, the big thing that's happening here is that Apple, Microsoft, Amazon, Google, and Facebook together now account for 40% of the Nasdaq. I'll say that again, 40% of the Nasdaq. Astronomical figures. Also, they make up over 20% of the total S&P 500. So really, they're pulling along some of these indices, especially the Nasdaq, where they make up 40%. And that's why we have the US 100 or Nasdaq at all-time highs. First thing I want to talk about, we are in a technical analysis bona fide uptrend. Anybody that's saying there's sell signals here, unfortunately, we haven't seen one. If you're looking at dips, we just haven't seen the sell signal because the Fed has stepped in. The 20 EMA has acted as dynamic support, and even the day we were about to get through it, after reaching that psychological level of 10,000 and finding resistance, which we spoke about on this channel, the Fed stepped in and it has continued to be a bullish momentum, and will continue to be bullish momentum until we see a proper change of trend. Now that we're about to reach a new all-time high in terms of closure, which could happen today with the stock market and the Nasdaq holding at 10,200 pre-market, where to next for the Nasdaq? Well, we'd pretty much expect it to be continuing on with it holding that 20, and potentially it might even take till it reaches around 11,000, the next psychological resistance level, before pulling back. Does that sound crazy? Sure, it may sound crazy, but the reason that happens is because we are in an interesting time for trading, a difficult time unless you're just buying and following the trend. Remember, the trend is your friend when it comes to trading. And also as an investment, you need to realize that when you invest, of course, in any quality index or quality stocks, generally they'll rise over time. So shorting them is difficult, and especially shorting them against the Fed. And we'll need a very clear signal before you can even consider doing that. At this time, it looks like bullish momentum's in, but we haven't seen a close yet on this US 100 Nasdaq. And until we see that, we're not sure what's going to happen. If it sells off today, we could even be beginning of a double top pattern where the market could come back and break through. But we'd need to see it below this point before we could even consider saying, yes, okay, the top is in on the Nasdaq right now. I want to just quickly talk about this news because you need to be aware of it. We have final GDP numbers on Thursday this week. Now, the time will be different for you because I'm in Australia, and it will be around the market open. So just be aware of that and definitely put it in your calendar because it is going to be most likely a volatile event. Before we get into the rest of our analysis of the S&P 500 and gold today, I want to just quickly talk about what Soros is doing. So George Soros now is placing most of his buys in utilities. In fact, he's been adding to the Utilities Select Sector SPDR fund. And when we have a look at that fund, we can see it's still relatively cheap compared to where it was before this crisis. It makes sense. It's one of those staples, and therefore it's a good hedge in some ways because what you're looking at is you're looking at where is the money going to go and what do people need to pay for. Utilities is one of those things. So Soros is in this. He's made that decision as part of his fund, and it's still relatively weak and relatively cheap. So it'll be one that we might cover on this channel, and we've covered utilities before in terms of buys. It still is a cheapish sector in the stock market. So something to look at for all you bulls out there. Another just quick thing, Italy has approved new guidelines for central bank digital currencies. I just want to bring this up because I've been a big proponent of this is what's going to happen. Central bank digital currencies are so easy for tax and so easy to trace, more importantly, trace and control. So this is going to be where I think money will go over the next decade to 2 decades, full digital currencies. A story to watch for sure. So let's take a look at gold from a technical analysis standpoint. So gold's been in a bit of a channel and it looks like it's broken out on the daily and closed above. We're still not above the highs of the wicks at 1765, but we are seeing bullish momentum and we've got pretty strong support here at around the 1740. With the strong break, 1740 could be a pickup zone, and if the strength continues, usually you expect the market to go around the length of what it said. So in this case, that range was about this length, and it would be predicting an 1820 in terms of where the market should go. When we go out to a monthly, however, we will see that previous resistances were around this 1790. So it makes sense that the market could bull into 1790 and find some resistance around there. And that would be a key zone that we'd be looking at, and we will look at on this channel over the next coming weeks. So gold's going up while we're seeing an increased risk-on sentiment coming back into the markets after today's moves. On the ASX 200, we also have a pretty interesting little kind of movement here in terms of the bull side. The market's been trapped, and we saw the sell-off today where the market got under 5,900 on the ASX 200, then bounced off this zone after that, of course, those comments about the US Trade Pact were reneged. And we have strong resistance at 6,000. So a break of 6,000 would really signify further bullish momentum into the previous highs at around 6160, even possibly up to the 6,200 resistance that was reached last time. That's what we need to do as traders. If it gets through this zone, it is significant. It's a psychological level and it would signal further bullish momentum to the next high. After that point, we'd have to reassess the market. Remember, trading and investing are a different thing. So what about the S&P 500? What's happening there? Well, here we have the futures, and we've always said that the best thing to do is wait for the closes on the S&P 500, the real index, not the futures. But the futures are trapped in the same zone. So we have that 30 kind of 80, 30, 70 area, and we've got the resistance here at around 3160-ish. So if the market is to get through that zone, generally you'll take the range And then of course, just like we did before, you'll take that range, extrapolate that out, and notice how the range goes back into the resistance at 32.40. This is key. If we see this market go out and break above, generally you'll see something like this. The market will break out, it'll come back, retest this level. This will be the role reversal where the resistance becomes the support. The market will bull off and it will try to attach to those highs, and that'll be the gap fill that you'll see in the markets. It makes sense, and of course, if this level is breached tonight and we see that kind of price action, that's the type of thing that you do expect in these markets. When it hits this resistance, this will be a point where people will take profit, at least traders will take profit, and potentially even some investors that are spooked by certain things and concerns they have in the market will take resistance profits. So generally you will see weakness come in off this point. It's just interesting to see whenever you have a pattern and then that pattern confirms to a point of resistance that was previously there. When that close confirmation happens and the market closes above, it's more likely to be correct because the price action is predicting a previous resistance or a previous support. So always keep that in mind. If you ever have a pattern and then that pattern predicts a take profit that makes total logical sense, guess what? It makes total logical sense. Hopefully everybody enjoyed this video today, and remember, knowledge is empowering, but only if you act on it. In recent times, you had to act very quickly. Remember to subscribe and hit that bell if you've been enjoying our videos, and we are doing a Q&A video soon, so put down in the comments below some questions that you have and we'll try to answer them as best we can to help everybody in the trading community with our experience. Happy trading everybody and investing. We'll see you in the next video. Bye.